Petty cash can be simply defined as the amount of money kept on hand for minor business expenditure. This may include items such as pens, batteries, light bulbs, and so forth. Although minor, petty cash funds allow businesses to better monitor and control its cash outflows. While the purpose of the fund may vary depending on the business and its operations, it consists of three activities. This includes establishing the fund, making payments from the fund, and finally, replenishing the fund. Establishing the fund is simple. We start by writing a check for the desired amount. This check is then cashed at the bank and cared for by a designated employee known as the custodian. For example, John's Candy Shop. Debit petty cash fund $100, showing the creation of the fund. Credit cash $100 to balance the entry. Next, let's look at making payments from the fund. There are two ways in making payments. Firstly, cash can be directly taken from the fund to make payments, or employees pay out of pocket, then seek reimbursement from the fund. It is important to note that regardless of the method, the custodian should collect all receipts for the use of any cash from the fund. Finally, let's look at replenishing the fund. As cash is used and withdrawn from the fund, we must then replenish it. To do so, we first calculate the remaining amount left in the fund and then calculate the amount of cash needed for the check to bring back to its original balance. To illustrate this, we create what is known as a petty cash fund replenishment report, in this case, John's Candy Shop. As you can see, petty cash fund $100, there's cash remaining in the fund $30, cash required to replenish the fund $70. The receipts followed, including pens, printing paper, etc., which total $70. It is easy to see that the cash required to replenish the fund agrees to the total receipt amount. A check is then written for $70 in order to replenish the fund, which is seen in this following journal entry. In some cases, the amount of cash needed for replenishment may not be equal to the total receipt amount. This could be a result of the custodian not obtaining all receipts or possibly given the wrong amount of change. This is where the cash and over and a short account comes into play, having a debit or credit balance depending on the situation. Let's illustrate this by looking back at John's Candy Shop. As seen here, there is a $30 difference between cash required to replenish the fund and total receipts, thus indicating a cash short. More specifically, printing paper expense was not recorded. This $30 is then added to the cash over and short account, which is debited, resulting in an increase in expenses, thus balancing the final amount. Thanks for watching.